Hey guys, what's going on? Just been really busy as usual. Now I have some time to do a video. Anyways, I saw this video from Peter Schiff the other day when the Federal Reserve announced its decision at the FOMC meeting. They got rid of the word patience and they decided that yes, they're going to raise rates, but it may take some time depending on where the unemployment rate's at. And my opinion about the Federal Reserve, I still believe that they're going to raise rates this year, maybe by 25 basis points. It's not going to be aggressive. It's not going to be like a Paul Volcker raising the Fed funds rate by 100% like he did in the 1980s. That was good what he did. But anyways, this video is labeled "Losing Patience Does Not Mean the Fed Has Lost Patience." And Peter Schiff talks about why he believes that the Federal Reserve is not going to raise rates and that the dollar rally is done and this is maybe the last time that you could get out of this rally, according to him. My take on it is that, yes, I do believe that we're going to move to a new reserve system, but that could take years. It could take decades before that happens. The dollar, in my opinion, is going to be the last man standing, even though it has several problems. But at the end of the day, the US dollar, in its current form, it is a basket of fiat-based currencies, where it consists of 58% of the euro, or 57%. So if the euro goes up, the dollar de facto goes down. But if the euro goes down like it has been, until recently, the last few days, the dollar goes up. So, long story short, inverse relationship between those two currencies. And Peter Schiff is comfortable saying that, hey, Europe is going to do better, and as a result, the euro is going to strengthen against the dollar. In the short term, yeah, from a trading perspective, I wouldn't be surprised if you see profits being taken, if you start to see a dead cat bounce in the euro. My overall theme is that Europe is going to experience a sovereign debt default. I really don't see many people talking about it, but at the end of the day, we have to look at what's going on. You have to remember that what's going on in Greece, not the best situation. They don't have a good relationship with the Germans, with the people in charge at the euro, with Belgium, etc. So put that together, I don't think that the euro is going to last in its current form. I feel that the Greeks are going to exit, and that's just going to create a mess. You have to remember that SHTF occurs every 8 or 9 years, and we're in the beginning stages of SHTF. That doesn't mean that the stock market is going to go down. It doesn't mean that we're going to see bail-ins like we did in Cyprus. No, it just means that there's going to be pain all around the world, and I feel that Europe is the first target, then Japan, and then the United States. And I wanted to show you something really interesting. So if you look at these bonds, the yields are ridiculous right now. Germany, it understands why everyone's parking their money there. You look at the yields, it's 0.18%, so that means that bond prices are extremely high there. Why are people doing that? Because people with a lot of money are scared. They don't know where to park their money, and they feel that if all these countries leave the euro, then capital will flow to Germany. And you could see the German stock market, the DAX, it's actually doing fairly well. And that's just capital going into their market. I wanted to look at other countries. France, this is ridiculous, 0.44%. Italy, 1.2%. Spain, 1.17%. I mean, these rates were extremely high in 2010, 2011. Portugal, 1.61%. Now, do I feel that these rates are going to go higher? Yeah, I do feel that they're going to go higher. When the central banks or the euro, they lose control. Once they start to lose control, once Draghi loses control or his guys lose control, then these bonds are going to sell off. Maybe Germany is not going to sell off but as much as the other ones. But the rest of them, I feel that they're going to sell off, and as a result of that, they're going to end up having to go back to their new currency. They're going to go back to what they used before the euro, in my opinion. And what will that do? It will disintegrate the euro, and then people are going to flock to the US dollar, going back to Peter Schiff. I mean, if you look at the next cycle, right, of what the next bubble is, I feel that it's in sovereign debt right now, looking at all the pieces together. And then it's going to go to industrialized countries, Japan, and then the United States, where we may see the 10-year hit, I don't know, 3-4% at least. And you have to remember that people borrowing at those rates when they're not doing so well, even though we've had deflation right now with the price of oil, with the price of everything, there's going to be a lot of pain to come, especially those individuals who are buying bonds in 2008 towards the top. So putting everything together, people are saying, like Schiff, that, hey, this is the last time you could get out of the dollar. I don't agree with that. And the reason is that Europe is on its way towards a messy slide. You have to remember the Syriza government in Greece, they don't get along with these charlatans, these quacks, who are leading our banking system, or leading their banking system. Putting all that together, still feel that the euro is going to face extreme pressure in the next few years. Once again, there's going to be dead cat bounces like we've seen recently, but unfortunately, as a result of the euro going down, the dollar, in my opinion, should go higher. Which sounds crazy from looking at it from an Austrian school perspective, but at the end of the day, if 58% of the dollar index consists of the euro, and the euro is having problems, huge problems, the long-term trajectory is still in the downward fashion. It's not going to go down in a straight line, but still, looking at all of these details, it just seems that the dollar bubble will not be bursting yet. Now, the dollar bubble, will it burst someday? Yeah, sure, it will. But at the end of the day, it may end up like the British pound, where slowly but steadily it just loses its purchasing power over time. And that's what happened when the British passed on the baton to the United States at Bretton Woods. And we're going to see the United States pass off the baton to China. It may not be today. It may be in, I don't know, somewhere between 15 and 20 years. When that happens, then yeah, the dollar is going to lose ground, in my opinion. But we shall see how the events unfold. Anyways, for those viewers in Europe, what do you see happening? Because this is more of a European type video, even though I'm still talking about the dollar. In addition, are you guys actually preparing for a devalued currency? Are you prepared for bank runs? I know that sounds crazy, but I think people in Europe may want to consider just buying some tangible goods. It sounds crazy, but I don't know, toilet paper, toothbrushes, toothpaste, save it for a few years. And the thing is that when there's panic on the streets, people are just going to go to the stores and buy everything out. So while the stores have inventory on them, it wouldn't mind to buy tangible goods that won't expire, like sponges. I don't know. That's my take. I mean, the problem with food is that, hey, it expires and you can't eat it at a certain date. So that's the thing with food, unless people decide to go prepper and buy dehydrated, freeze-dried food. But anyways, guys, leave your thoughts below. Is this a bond bubble? I'm asking you a question that's going on in Europe. I mean, the rates that I'm looking at, they're ridiculous. And we know that bubbles pop every 8 years. So now, is it in bonds? Is it in sovereign bonds? Is it in bonds in Germany? Not in Germany. Is it in Japan? In the United States? Is the bond market going to sell off? I mean, interest rates, in my opinion, have nowhere to go but up. So, looking at this, the rates have nowhere to go up. Could the rates go lower from here? Yeah, sure. You have to always keep an open eye out, but I'm just looking at it from a common sense perspective, or trying to look at it from a common sense perspective. Anyways, guys, thanks for listening. Talk to you later. Goodbye.